Welcome back. You're watching Day Street. Let's now go across to Mohit Mirchandani, Head of Equity of Taurus Mutual Fund, who joins us from Mumbai. Thanks very much, Mohit, for joining us this evening on NDTV Profit. It's been 2 days of very good going for the Lal Street. Expectations are that the new fresh 52-week high could probably be made tomorrow. What is your sense? Because momentum is definitely coming back and risk sentiment is as well.
Sure. I mean, we have momentum going for us, and it looks as though Europe is doing very well today. And if the US does not disappoint, then sure, tomorrow could just be a day we make new 52-week highs. Can't rule that out.
Well, fingers crossed on that one, Mohit. But just to pick up on what Bank of Japan did, because I believe that was the key positive trigger coming in for our markets as well in the second half of trade, where they've actually gone ahead and added about $120 billion to new lenders, clearly working on expanding their monetary strategy. What do you make of that? Because on one hand, you've got Bank of Japan doing that, but on the other hand, you've got Reserve Bank of India, which is clearly increasing its interest rates. They've already done that earlier in the day.
I think both economies are at different stages of their, I would say, economic development. We have a different demographic, and we are on a growth path. Japan, I think, has just been stagnant, a lost decade, maybe lost 2 decades now. So they are trying to just reactivate the economic engine there. So I'm not sure it's fair to compare what we are doing and what they are doing. Our situations are different.
Mohit, let's talk a little bit about the economic data flow that has been coming in. November auto sales came in, pretty much surprised everyone. Second month of consecutive gains. There was expectation that post the festive season, some of the growth may actually taper off, but that hasn't happened. What's the sense you get from the auto majors particularly? Do you think this growth recovery is sustainable in the coming months as well?
I think so. We, as an economy, I think the worst is behind us. What that also means is confidence is only going to get better going forward. What that also means is that consumption, whether it is auto or anything else, is going to keep getting better. So I am in the camp that believes this improving auto sales trend is sustainable. What we also need to keep in mind is the penetration levels of auto ownership in our country is very low. And with an improving demographic profile, as in a lot of working population, we are catering to a lot of aspirations, and for a lot of them, it is automobile could be one part of satisfying that aspiration, whether it is a two-wheeler or a four-wheeler. But owning an auto is one part of those aspirational values.
I want to continue with the growth theme here, come back to the GDP data that came in yesterday, particularly the manufacturing space. 9.5% growth surprised everyone on the street. How do you interpret both a couple of these data flows that have been coming in, and how should an investor look at placing his portfolio based on these kind of developments? Would you look at going long on the auto space with a long-term perspective, perhaps even looking at the capital goods, the infrastructure space now?
I'll break that up. Autos, yes, I think longer term one has every reason to stay optimistic, and we are very bullish on auto. If we decide to play the next 2, 4, 5 years, we think auto is in a sweet spot. So that is good. Industrial manufacturing, I think, is going to be very selective. You know, I am not so optimistic on the process-driven industrial manufacturing, because a lot of the capex additions have already happened. So some of those companies that cater to increase in capacities is something we're not looking at. At the same time, there is also a segment of companies within industrial manufacturing that caters to the power segment, to the infrastructure segment. Yes, we are optimistic on those.
Mohit, one sector that made quite the dramatic pullback was, comeback, was the realty space, managing to close over 6% higher. Fundamentals haven't improved dramatically, but what do you think is driving the realty sector? And of course, would you go long on that right now?
Realty, you know, I think in one of your earlier shows I've mentioned that fundamentally we are not long on realty. We understand there is a clear penetration story going on for home ownership. That's for real, it's a structural story, but we're not too convinced about the regulations revolving around the real estate space, and so therefore the transparency levels, etc. So that is one reason, we find it difficult to play the space. Although from a macro theme, we think there is a lot going for that sector, and so we try to play the realty space via other names which cater to the space or that move up or down the value chain of the real estate space. So on a day-to-day basis, who can tell what triggers a move? Just positive sentiment, and real estate is probably the highest beta, and so that takes off on a good day, and it gets hammered on a bad day. So on a day-to-day basis, pointless reading too much into it. Having said that, it's very good for picking up a little bit of trading here and there, but never going to be part of our core holding.
Mohit, then what would you advise investors to get into right now? As part of your strategy, what would you advise investors?
We continue to stay optimistic on the themes we've mentioned earlier on your shows. We like the agro space from a structural standpoint. We like the consumption theme in India just because of the improving demographics, and consumption includes durables, autos, regular FMCG products. We also like healthcare. Just that is more of a overseas play and an India play, because we have an aging population worldwide, and we think there's a lot of opportunity for the Indian players to tap there. And we like the banking space, of course, because when we get into an expansionary mode, banking is always going to be the first to benefit from that. So we like these four spaces.
Mohit, I want to come back to the domestic growth story, talk a little bit about the pharmaceutical space as well. The deal flow there has been particularly strong. There's a buzz around Ranbaxy that some improvement around Devas is expected in the next couple of weeks as well. There's fundamental news around Cipla tying up with Pfizer, and also there's fundamental news around some of the other mid-cap names, including Glenmark coming out with an IPO. Does it, however, prove to you that the sector, the healthcare sector, is perhaps a sector which is under-owned at this point of time from a long-term point of view, perhaps may warrant a second look, perhaps even aggressive targets may come in for some of those pharmaceutical stocks ahead?
I think so. I see no reason why, and I think we are in the process of doing that already, which is re-rating the healthcare or the pharma names. We are willing to give FMCGs companies 20 to 30 times. I don't see why pharma cannot go into that PE band, 15 to 25 or even 20 to 30, depending on the name and the quality of financials and business. So I think we're in the midst of that re-rating of the pharma sector, and justifiably so, because throughout the downturn, their earnings have been good, news flow is good. The opportunity is there for everyone to see in the Western world, in the emerging markets. So I just think it has everything going for it.
Right. A quick mention about what important themes we'll be tracking in the year 2010. I know it's a little too early for us to start talking about that, but you must have identified some core themes to go and track into the year 2010.
As things stand today, we are very optimistic on the themes we mentioned. I just mentioned a couple of minutes ago. But yeah, I think we are beginning to look at stock-specific ideas which may fall outside of these themes, which we think are relatively cheap with good quality business and management. So we think there is room on a stock-specific basis. From a thematic standpoint, I think these themes I just mentioned will play out over the next 3-4 years. So there's no need to change it unless, some of them get too expensive or the dynamics change. Then we'll take a relook. But for the moment, the themes we mentioned look just fine.
All right, Mohit, great having you with us on D Street. Thanks always, and appreciate your comments highlighting very important sectoral movers there, which perhaps may see a bit of an upside in the long-term basis. Sounding very confident as far as the pharmaceutical space and select infra stocks are also concerned. Mohit, thanks so much for joining us this evening on D Street.
And of course. That is all the time we have on the show as well. But keep it with the channel. It's off to Profit Newsroom. Bharat and Anisha will be with you in just a few minutes.